U.S. stocks are attempting to recover from Tuesday's massive losses. Joining me now from the NASDAQ market site is Nicholas Colas. He is the chief market strategist at Convergex, a global brokerage company based in New York. Hi, Nick.
Hello, how are you?
Great, thanks. So a combination of a few factors all brewed at the same time contributed to Tuesday's sell-off, including the strong dollar, dip in oil prices, weakness in European markets. But you think buried under all those headlines is an even more important data point.
Yeah, when you look at the JOLTS data that was out yesterday, which is Chair Yellen's favorite look at the labor market in the U.S., you get a very strong sense of underlying growth in the labor market, and that really is the linchpin of the whole rate discussion, and that, I think, has really spooked markets as well.
And so investors are constantly looking for clues on the timing of the rate discussion and when rates will rise. The Wall Street Journal is reporting the Fed will drop the word patient from its statement ahead of a hike that could come as early as June. How likely do you think a June rate hike is, and will the markets be able to handle it?
I think a June rate hike is very unlikely because we just haven't had enough of that strong data to push the Fed to move. But removing the word patient is a very strong signal that they plan to go in June, and that's when I think both the market and the Fed funds futures market really expects that rate increase to come.
In June?
Yes.
And the Dow and the S&P both gave up their gains for the year in Tuesday's sell-off. Why do you think that stocks will still be able to finish in the green this year, and by how much?
Well, we're looking for the S&P to be up between 6 and 8% this year, albeit with a lot more volatility. And the simple reason for that is that interest rates are still so low around the world that as investors look around for places to make money, it's very hard to rationalize buying a 30-year German Bund or a 10-year U.S. Treasury when you can get very good earnings growth over a cycle from stocks, and that's the better place to be.
Thanks, Nick. Nick Colas is the chief market strategist at Convergex, a global brokerage company based in New York. And for The Street, I'm Susanna Lee in New York.